Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to have a look at some multiple time frame analysis on the Nifty over there in India, but we use the same approach for any market in any time frame. But before we get onto the charts, we have to do our risk disclaimer. So just remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. We'll be looking at some losing trades a bit later in the video as well. So all professional traders must know and understand, but more importantly accept, that losses can and will and do unfold. Right, let's have a look at the chart. The market I want to look at today is the Nifty over there in India, and just show you how we approach our analysis with MTPredictor. We do a multi-time frame analysis approach where we look to the higher time frame chart for the larger degree support and resistance zones, and then we look to the shorter time frame chart for the actual trade setups. And these are time frames between 3 and 5 times between each other. So I'm going to look on 5 minute and 3 minute for the setups. I'm going to have a look in the scanner. You can see the scanner, we've got 3 minute, 5 minute and 15 minute running there on the Nifty and the Bank Nifty. So for these, the higher time frame would be the 15 minute. If you say trading daily stocks, the higher time frame would be the weekly. If you're say trading forex on maybe a 4-hourly chart, the higher time frame would be the daily. If you're trading on say a 15-minute time frame, the higher time frame would be the hourly. So a logical time frame between 3 and 5 time frames higher. So for this, let's use our training mode. Let's jump back to before today even started, and what we do is we look for major prior swing pivot highs and lows. And you can see here on the Nifty there's a couple of minor swings here but there's a major or fairly major pivot swing here. So what you do is hover over this, right mouse click, then do decision point, and this gives you an area of potential support or resistance. In this case resistance, as it's above the market for potential for where a market may well potentially make a high. So the point being is this is on the chart in advance. If I turn training mode off, you can see this actually went up and caught the high of the day, which is the 8th of May today, very nicely, and the market declined off that. Remember, on the backdrop of this, markets go in cycles, so about half the time you won't be getting any clear patterns, any clear signals at all. So about 50% of the time markets are random. So you can't be doing any analysis at all, and that applies to any kind of a trading approach, not just MTPredictor. So what we're looking for is when the pattern becomes clearer, and for this we then look to see whether the market makes meaningful support or resistance on the higher time frame charts. It's almost like the fog clearing. And can you see here, that's exactly what happened today. With the start of the day, the Nifty came into this 15-minute resistance. If we go down to say a 3-minute chart, what was the 3-minute chart telling us? Well, it came down, it then chopped sideways and then went down. So we'd be looking for potential sell setups. There weren't any. There was a VS buy setup here, although this was on a black MTP trend. Can you see how the large view trend would probably be down off this higher time frame resistance? So in other words, you may not want to take that. If you had wanted to take it, then bring your stop to break even quicker. In other words, you'd anticipating the market won't carry on up, it should be rolling over. So what we're looking for is sell setups. So you see there weren't any here early in the day. There was a couple later in the day that actually turned out to be losing trades. Remember, losses can and will and do unfold. This is why we have our position sizing to take care of the number of contracts. I'll just go in there and do a rupee account. You can see you can change the currency and the size of your accounts as well, and also the risk profile. So losses can and will and do unfold, but I want to look at these in a bit more detail on the 5-minute chart, because you'd have had your scanner running, and in that you'd have noticed that there weren't any setups earlier in the day on a 3-minute chart, but there were on the 15-minute chart. So 5-minute chart. So let's now go look at the 5-minute chart. And can you see how earlier in the day, or I should say around midday there, Indian time, we had a lovely TS3 sell setup. This was particularly good as we'd come off the 15-minute resistance, therefore we're looking for short trades. Right mouse click over the red sell bar, do analysis, and you can see at our first target there, the profit would be in approximately 6R, or 6 times the initial risk. This is why we use position sizing, so when the trades come through and they're profitable, the profits are large in relation to the losses. So that was a very, very good trade. If you had been trading a bit later in the day, the pattern probably wasn't quite so clear, even though our NTP trend was still red, indicating a downtrend. There was a losing trade here. You can see on our history triangle, you can place the analysis on to see what that would have done. So if you'd have taken that, that would have been a loss. Remember I said at the start of the video, losses can and will and do unfold. But because we use position sizing, this would be what we call a 1R or 1 risk unit loss. Again here, there would have been another short trade. You may well have bought your stop to break even. If you had, that would have been a break even trade. If not, again, that would have been a losing trade as well. There was one a bit later in the day, but that was quite close to the end of the day, so you may not well have taken that one. But do you see how even though there were potentially two losing trades here at 2R loss overall, -1 and -1R, this profit earlier in the day more than made up for that, with the profit being potentially 6R or 6 times the losing trades earlier in the day. If you're an advanced trader, were there any ways that you could have perhaps extended this particular profit? Well, because this was the major high, the initial decline down here could have been potentially a wave 1. This could be potentially an ABC correction into a wave 2. So you may well have actually wanted to go down to the typical wave 3 WPT down here and seen that as the market was making a blow off move down here, perhaps look to bring your stop really, really tight, or look to take profits just as it's almost reaching that level there. If you had have done that, would have increased the profit significantly. But more than likely, if you'd been an experienced user, you'll have put the DP on from the last swing into the high. Remember, we look for DPs for support and resistance, so there's the last major high. This is the last swing into the high, so you'd have come to this pivot here, right mouse click, place decision point on. Again, remember how they are on the chart in advance. So they would have been on the chart before it even got there. So if I take the training mode and I go back to that setup, that would have been on the chart in advance. So as the market starts to go down, oops, went a bit too far there. As it starts to go down, rather than coming out at or looking at this first target for the profit, you may well have said, well, everything looks good. We have higher time frame resistance. We have our MTP trend. Everything looks good. I might want to try and use this here as our potential target. If you had have done that, would have increased the profit to approximately 10R. And as you can see, the market made basically a spike right through that, and you'd probably had positive slippage on your fill coming in there. So that's a good little tip there to try and perhaps use targets that's slightly further away but logical support and resistance zones. If you had have done, that would have been a very, very nice trade of approximately 10R. But either way, if you hadn't and you'd come out at the first one, that would have been a nice 6R profit. But do you see what we're doing? We're basically realizing that half the time markets will be random. Half the time they will be in clear patterns. How do we decide on when the pattern's clear? Well, we go to the higher time frame chart. We put our higher time frame DP support and resistance zones on. Will the markets go to these all the time? No, they won't. Of course they won't, because half the time markets are random. But if they do, and the market makes meaningful support or resistance, in other words, makes a meaningful reversal at these levels, like it did here, then you can go to the shorter time frame chart and look to see whether you get any nice, clear, clean setups. And this one here is a great example of that very thing, in that lovely high, a nice decline, a nice ABC pattern into a tier 3 sell setup, a very clear, clean pattern. They're the kind of things we're looking for and will give the best results. As you can see, that should have been at least a 6R profit, if not 10R. If you had then carried on trading a bit later in the day, these would probably be a lower probability trade, because obviously we've had the move unfold already in the day, and there might well have been a correction. But if you had have taken these, as we've seen already, they would have been losing trades, but the losses were kept small at -1R. So that's what we're looking to do with MTPredictor. We're looking to trade when the picture's clear and understand that half the time the markets are random, but half the time you can then do meaningful analysis. Understand that losses can and will and do unfold, but the losses were kept small, and then we're looking for trades where we can have profits that are larger than losses, and also look for ways to perhaps extend those targets into logical support and resistance zones to make the trades or the profitable trades run a bit further. So a good example of multiple time frame analysis unfolding on the Nifty today, which is the 8th of May, on 15 and 5 minute charts.